Welcome back to BitcoinDorks, your daily source for the latest updates on cryptocurrency markets and news. Today, we're diving into an important question that's been on the minds of many Bitcoin holders. Should BTC holders prepare for a pre-halving correction? Let's delve into the factors at play and explore what this could mean for the future of Bitcoin. First, let's quickly recap what a halving is and why it's significant for Bitcoin. The Bitcoin halving, also known as the halving, is an event programmed into Bitcoin's code that occurs approximately every 4 years. During a halving, the reward that miners receive for validating transactions and securing the Bitcoin network is cut in half. This reduction in the rate of new Bitcoin issuance has historically been associated with significant price increases in the months following the event. With the next Bitcoin halving on the horizon, many investors are wondering whether a pre-halving correction is imminent. Historically, Bitcoin has experienced periods of heightened volatility leading up to major events such as halvings. These fluctuations are often driven by a combination of speculative trading activity, market sentiment, and external factors such as regulatory developments and macroeconomic trends. One factor that could contribute to a potential pre-halving correction is the phenomenon known as buy the rumor, sell the news. This trading strategy involves investors buying an asset in anticipation of a positive event, such as a halving, and then selling once the event occurs. If a large number of investors adopt this strategy, it could lead to a temporary downturn in Bitcoin's price as selling pressure increases. Additionally, another factor to consider is the potential for profit-taking by long-term Bitcoin holders who have witnessed substantial gains in the period preceding the halving event. As Bitcoin's price escalates in anticipation of the halving, a segment of investors may opt to capitalize on their profits by selling a portion of their holdings. This action, known as profit-taking, can exert downward pressure on Bitcoin's price as selling activity increases. Long-term Bitcoin holders, often referred to as hodlers, may have accumulated their holdings over an extended period and experienced significant appreciation in the value of their investments. As prices surge in anticipation of the halving, these investors may view the opportunity as favorable to realize some of their gains and mitigate potential risks associated with market volatility. Profit-taking strategies vary among investors and can range from partial liquidation of holdings to complete divestment depending on individual circumstances and risk preferences. Some investors may choose to sell a predetermined percentage of their Bitcoin holdings to lock in profits, while others may opt to hold onto a portion of their assets with the expectation of further price appreciation. The impact of profit-taking on Bitcoin's price dynamics can be significant, especially during periods of heightened market activity surrounding major events such as halvings. Increased selling pressure resulting from profit-taking activities can dampen upward momentum in Bitcoin's price trajectory and lead to short-term price corrections or consolidation phases. While profit-taking by long-term Bitcoin holders may contribute to temporary price declines or volatility in the short term, it does not necessarily signal a fundamental shift in Bitcoin's long-term outlook or value proposition. Bitcoin's resilience and robust fundamentals, including its scarcity, utility as a store of value and growing adoption as a hedge against inflation, continue to underpin its long-term investment thesis. It's crucial for investors to avoid being swayed by short-term market sentiment or attempting to time the market based on speculative events such as halvings. Instead, adopting a disciplined approach to investing, grounded in thorough research, risk management and a comprehensive understanding of Bitcoin's value proposition, can yield more sustainable outcomes over the long term. Bitcoin's intrinsic value lies in its revolutionary technology, decentralized architecture, and limited supply, which set it apart as a unique store of value and medium of exchange in the digital age. The growing institutional adoption, mainstream recognition, and infrastructure development surrounding Bitcoin further bolster its long-term viability as a global reserve asset and hedge against traditional financial risks. By focusing on the underlying fundamentals of Bitcoin and its potential to reshape the future of finance, investors can position themselves for success amidst market volatility and uncertainty. Bitcoin's fundamental value proposition lies in its revolutionary technology, which enables secure, borderless, and censorship-resistant transactions without the need for intermediaries. As a decentralized digital currency with a fixed supply cap of 21 million coins, Bitcoin offers a hedge against inflation and the erosion of purchasing power associated with fiat currencies. Bitcoin serves as a store of value and a medium of exchange, providing individuals and institutions with an alternative to traditional financial systems plagued by inefficiencies, opacity, and centralized control. By recognizing Bitcoin's intrinsic value and its disruptive potential in the global financial landscape, investors can make informed decisions that align with their long-term financial goals. Moreover, it's essential to remain informed about macroeconomic trends, regulatory developments and technological advancements that may impact the broader cryptocurrency market. Staying abreast of market dynamics and adapting investment strategies accordingly can help investors navigate changing market conditions and capitalize on emerging opportunities. In conclusion, while profit-taking and short-term price fluctuations may present challenges for Bitcoin investors in the lead-up to the halving event, maintaining a steadfast commitment to long-term investment principles and the underlying fundamentals of Bitcoin is paramount. By embracing a strategic, disciplined approach to investing and focusing on the transformative potential of Bitcoin as a digital asset, investors can position themselves for success in the evolving landscape of the cryptocurrency market. That's all for today's video. If you found this information valuable, don't forget to like, subscribe, and hit the notification bell to stay updated on the latest crypto news and analysis from BitcoinDorks. Until next time, happy hodling.